Hey there, guys. John.Hunter, your mortgage hunter, coming back to you again with another weekly rate update. This one for the week ending in August 16th. So, rates were really flat on the week. The market consensus is no longer about when the Fed will cut rates, it's all about how much. So, September is the month, so that's less than 30 days. So, we will have to see. Now, this week, rates 30-year fixed is anywhere from about 6 to 6.75. 15-year, we're looking at 5.5 to about 6.5. FHA 6.375 to about 7. VA 6 1/8 to about 7. Down payment assistance is on the low end 6.125, but more like around 7, upwards of 7.65, depending on the program. All these rates, guys, are based on loan amount, loan type, whether you're a first-time home buyer, whether you're within the median income, property type. There's just a lot of variables here. So if you want something that fits your exact scenario, give me a call. I'll give you an individualized quote and see if it works for you. But, all in all, September cut. The question at this point is it going to be 0.5% or 0.25%, right? And this week's information or data that came out, the reports on inflation and whatnot, basically aren't as doom and gloom as we saw a couple weeks ago when the market went crazy and the rates dropped and the Dow went to crap. So the last week or so, especially this week, they're pretty much sure that the Fed's not going to do an emergency cut, which is on the plate 2 weeks ago, or on the table. But, of course, it didn't happen. So really, the term soft landing's being thrown around, which you guys know if you listen to this, I'm not a believer. The Fed's never been able to do it. It's always this Pollyanna view of what they're doing. So really, the roller coaster is going to continue for the next couple months, guys. The rates are going to be dropping. They already are. We've seen a real drop month over month, but within that, you're going to see these little roller coaster, little ebb and flow. There's going to be some reports that conflict. So that's really what we saw this week. Is we saw a couple strong indicators, even though inflation is continuing to drop, and that's where all of this talk comes in. So I do believe over the next couple months we're going to see some more negative employment, negative job growth, and negative economic indicators, that starting to miss the mark, that is going to throw fuel on the fire as far as the recession goes. I think we're in one right now, and the data will prove that over a couple months. So we will have to see. The trend is down, though, and that is the good news to take out of this. That it's not going to be a straight line, but they're definitely headed down. So the other factor here is the election, right? So we have the debate coming up, and to say the Fed is not a political, not influenced by politics, even though that's the official deal, it's not true, right? So we're going to see the Fed under a lot of pressure to be cutting, to make the economy look better, to throw some money into the mix as far as into the economy, make people feel better about where it's at, to influence votes. And that's going to happen. I think it's already kind of started. The Fed should have been cutting months ago, but they didn't, and here we are. I think they're going to get pretty aggressive come September, hoping to influence the market. So, if you like the drama, welcome to the show. Here we go. So, hey guys, I hope you enjoyed this. I hope you find it useful. Rates are headed down. Market's hotter than it's been in a while, so good time to buy a home. Refinancing applications are way up over what they were just a couple months ago. People are finding real value in taking advantage of this recent drop. So if you're one of them, feel free to give me a call. I'd love to help you out. John.Hunter, your mortgage guy, coming back to you every Friday with a rate update and more fun information posted weekly. So come back and join me, like, subscribe, and I will talk to you soon. Have a great weekend. Thanks for watching. Bye-bye.